Starting to fade now, as President Trump said in a post on Truth Social, he's ending all trade discussions with Canada because of the country's implementation of a digital services tax, and he's threatened to impose a fresh tariff rate within the next week. Now, the European Union and the U.S. believe they can reach a trade agreement before the July 9th deadline, when the U.S. is set to impose a 50% tariff on nearly all EU products, and the EU plans to impose its own countermeasures. Now, the EU is seeking a mutually beneficial deal, but it's getting those countermeasures ready just in case those talks go sideways. We check the markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. It's not down, it's up. Up 0.1%, now at 9 points higher. NASDAQ is 4 points higher, and the Dow is up 260 points. That's about 0.6%. The 10-year Treasury yield at 4.28%. The 2-year yield at 3.74%. NYMEX crude oil is up 0.4%, trading at $65.50 a barrel. Brent crude oil is up just a little bit, just a tiny fraction, trading at $67.76 a barrel. Now, Republicans have reached a tentative deal to raise the limit on the state and local tax deduction to $40,000 a year for a 5-year period. That's according to folks familiar with the matter. It was not clear whether enough of the so-called SALT Republicans in the House would accept the concession and drop their threats to block President Trump's massive tax and spending package. All of that is fluid, and it's going to be happening throughout the weekend. In fact, President Trump said his July 4th goal to pass his tax bill isn't an absolute deadline. That gives negotiators a little more breathing room. He's planning to stay in Washington over the weekend to exert more pressure on lawmakers to reach a deal on the bill, which remains divided over several thorny issues, including SALT. Talks between Treasury Secretary Scott Bessent, House members, and Senate leaders have coalesced around that $40,000 cap in the SALT legislation. Senators are still pushing to water down other elements included in that plan. Consumer sentiment rose sharply in June to a 4-month high, with the final June sentiment index increasing to 60.7. That is up from 52.2 a month before. Consumers expect prices to rise 5% over the next year, down from 6.6% in May. They saw costs rising at an annual rate of 4% over the next 5 to 10 years. Now, despite the improvement in sentiment, consumers are still anxious about the potential impact of tariffs, and their views are still consistent with an economic slowdown and an increase in inflation to come. The Federal Reserve's key inflation gauge ran slightly above expectations in May, clouding the outlook for rate cuts. Consumer spending declined 0.3%, the most since the start of the year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec.
All right. Amy, thank you so much. Really appreciate it. Carol Massar, Tim Stenovec, live here at the Charted Community Summit. A lot going on here, a lot of conversations. Got to say, the mood feels pretty optimistic in terms of what we are seeing and the panels that are going on. People talking about liquidity events, which could mean a company going public, a company, doing some kind of M&A deal, or, so these are the kinds of conversations that are going on. These are all things that give us some indications about the economy. Having said that, what we're seeing in markets, what investors are most worried about is the inability to do all of the trade deals. Some good news and maybe some not so good news.
Yeah, and look, we're going to be talking about this throughout the program today, but I think July 9th and sort of the specter of July 9th is in the background with the way everybody's thinking about markets. And you add in the anxiety today that I think was created when we learned just in the last hour that the president has ended those Canada trade talks. So think about it. There are roughly 100 trade talks that, and only, a handful of important ones, but 90, as the Secretary of Commerce has talked about,
right,
that they need to accomplish. And if you have one that falls apart like this, and there is real headline risk when it comes to the trade, and we saw that with the stocks pairing gains today.
It's just a reminder that when we think we can't be surprised, we still can, as certainly as investors, and that plays out. The markets react very quickly, very swiftly, and you can see that clearly in the trade. All right, you are listening and watching Bloomberg Business Week Daily. Carol Massar, Tim Stenovec live here, and I believe we can go to our guest. We're doing this in real time. You guys are seeing the sausage be made. Michael Loeb is with us. This is his home. This is his event. He's the founder and CEO of Loeb.nyc, and he co-founded Uncharted a few years ago. And I got to talk to you this morning, so I feel kind of doubly blessed to get some more time with you. The event is underway. Tell us about what you're hearing, some of the things so far.
Well, I think that there's a great deal of buzz. most people are saying exactly what you are, which is that they're doubly blessed just to be here and get to know everybody else. But I mean, if you were to take a look at the background, you would see, 600 people talking to 600 other people. It's quite the event, and what we really want to do is foster relationships between investors and companies, between companies and companies, and between CEOs looking for talent and talent looking for CEOs. So I think a good time is being had by all, and certainly the weather has been totally cooperating. I think you had something to do with that, so I thank you for that.
You're very welcome.
Right? So, little tiny windy, if you could take that down just
I'll
a
take
touch.
some
Sure.
wind.
This is kind of perfect. It beats the weather we had earlier this week. I was a little concerned about that.
Yeah.
An event like this, you've been doing this for a few years. It started during the pandemic. It started a lot smaller. How do you, and I heard you say earlier today, and your partners say this too, Noah, that he is running into people constantly. You say, they raised money as a result of being here. They found a co-founder here. They found employees here. How do you measure the success of an event such as this in the days, weeks, and months following it?
Right. I wish we could, because I should have a VIG on all that, don't you think? I mean,
Yes.
So we were just talking to Dave and John, like, Shark Tank kind of thing.
Yeah.
Like maybe you could kind of get in on that. I
You've
don't know.
known Noah for a long time.
Right. So, I got to tell you, we do solicit testimonials of exactly the things that you're talking about. We have quite a few of people saying, I met my founder there about 2 years ago. Noah and I get an invitation, and it was shrouded in mystery, and it was 3 women who had us go to an event downtown, and they brought us up on stage. Everybody started to clap, and what that was is these were 3 women, never met before. They were all, elite athletes, and they decided there should be a fund supporting elite athletes, that they had a different point of view, a different sense of how to compete, and they all got along very, very well, and that thesis led to a $50 million fund. So it's that type of thing that, really propels us.
Well, talk to us about, capital. How much is out there for startups?
Wow. It's funny. Things go in cycles, as you know.
Right.
This is not an up cycle for capital formation. Last numbers I looked at, and they're a little bit stale, but, down 60 or 70%. Certainly the secondary market, if that's any indication at all, does illustrate that, there's a lot of illiquidity looking to get liquid.
Right.
Not nearly as frothy as it used to be was IPOs, even though that's starting to unlock a little bit. So no, it is hard, and the money does gravitate these days to AI. So you need, if you have
So when
AI,
there is an idea, when there is a startup, that's where it goes.
it goes there, right. And what folks don't, I think, really realize or appreciate is the forces at play in venture and venture funding and venture capital, which is, I sometimes call it a beauty contest. And that is because there's one breakout winner in a category, and then all the LPs are asking their GPs, what is your AI strategy? And if the answer is, we think it's a little oversold, we think it's a little bit, frothy, whereas there's going to be a couple of winners and a lot of losers, we're taking a wait-and-see attitude. The answer is bye-bye. I'm bringing my money to that fund that made that investment. So a lot of pressure for them to jump in. And it's in those situations that, not so good deals are made. Right. So,
Does it, in terms of cycles, does it feel like this AI cycle is different than previous tech hype cycles? And the reason I ask, and look, nobody wants to hear or utter the phrase, this time is different. But if you look out at the private markets right now, you've got sky-high valuations, I think many would argue, for OpenAI, right? For Anthropic, for Perplexity. You have meta platforms coming in and dropping billions of dollars to buy 49% of an AI company that barely existed. You have founders being poached. We're talking $100 million signing bonuses for an individual to go to a large company.
Right. So I look at my mailbox every day. I'm looking for my $100 million check. Hasn't come in yet, right? So if you can arrange,
you just
that,
gotta
really
make your web browser or your website .ai, and maybe it'll happen. I don't know.
Done.
So to me, and this is not quite answering your question, but it's all about me, so I'm going to answer it from my perspective, which is that to me it feels different. Now, what does it feel like? I've been around for long enough, so I'm something of the elder statesman here. I've been around long enough that I've seen a few cycles. This feels like the late 90s, and the late 90s was the advent of the internet.
Right.
And it feels this profound. Now, people can say, well, if we look back 2 or 3 years, it was NFTs, and that was a false positive. And before that, it was blockchain, which was sort of a false positive. And before that, it was cannabis, and before that, it was Bitcoin. And but this one feels real, and this has the possibility of disrupting entire industries. I had breakfast, by the way, with a friend this past week. He has a unicorn. Business is worth almost $2 billion. He has 270 people. And he said, Michael, by year end, it's 120.
Meaning he is going to lay
Wow.
people off because AI has become
Right.
so
Fast-
efficient.
Right.
Fast-growing
Right.
company, super fast-growing company,
That's
unicorn.
scary.
I
That's
know.
really scary.
I know, but that's what's going on. And
So do you
going on
think?
in
So
some
do you
of my
think there is
companies, too.
something? Do you think there is something to what Dario Amodei has said, who's the founder of Anthropic, among the co-founders of Anthropic? There are many. That in a couple years, we're going to see a serious uptick in unemployment as a result of this tech. Like, this is something policymakers need to be freaking out about right now.
Yeah. Well, look, I respectfully disagree, and all I have to go on is history. And starting in the 1700s, right, when there was that industrial revolution in England, and we burned down all the factories with a spinning wheel, thinking everybody would be unemployed, that has not happened. But markets, employment, people have an amazing ability to retrain themselves, find the opportunities. In the end, I think we're going to be okay. Is there going to be some displacement? There's always some displacement. I hope you find something that we can have less lawyers, because we use less lawyers. But I think at the end of the day, brilliant people are going to find their way. And the people you're talking about are very smart people, engineers. They will find their way. We're always going to need them. And this is going to be like every other labor-saving prediction. This is going to be just another one.
All right. We're going to unfortunately have to leave it there, but thank you for inviting us. This has been fun. Kind of fascinating. Can we just go there for a minute?
Sure.
Media, the changes that we have seen in content, production, where you get it. I don't know. Who'd have thought? I mean, I used to do subscriptions, right, in terms of magazines and various newspapers. We don't do that anymore. Where do you think it's all going?
Well, it's, finance and media are the two industries most profoundly changed by digital technology.
Yeah.
Because they are all just figments of our imagination. And you can create them with no assets, just your mind. And so, what happened, though, is that media, the tsunami of digitization hit media fast. And old media came crumbling down. And new media, obviously, has just done nothing but the upward tilt. It has not yet happened, generally speaking, in financial services. And you still have the same 50-year-old, 100-year-old, 150-year-old firms that dominate. And so that industry is now ripe for digitization.
A lot of folks are working to digitize that industry. You've been working in that for decades at this point, but it's a very lucrative industry. It's also very sticky when it comes to the way people manage their assets. They don't want to move advisors. They don't want to move firms. I think especially high net worth individuals still feel like they want somebody to talk to, and that service comes with fees, 80 basis points, 120 basis points. Those fees eat into returns. This is something that you've been working on for years. You did it at Personal Capital.
Yes.
What are you doing now at Evergreen Wealth?
We're doing two things. We're doing wealth management for people who have, let's say, investable assets of $1 million to $5 million. And these are people who don't get the kind of white glove service that people who have 10, 20, $100 million do. And so what they need is somebody who can take the tax and investment principles that the people who have more money utilize because they have tax attorneys and all the rest, and then look for someone who can use technology to make that scalable. And in fact, precision engineering to make it even better than traditional wealth managers deliver. If we do that, we can give them better pre-tax return and then better after-tax return, because that's the thing that everyone forgets.
Can everybody benefit by this?
Yes, absolutely. Everyone who has sufficient resources that the tax impact is meaningful. And so a couple of $100,000 to a couple of $1 million, yes, you should absolutely be managing your investment portfolio in a tax-aware way.
You're the founding CEO of PayPal. We talk a lot about the PayPal mafia, those folks. We've spoken to Reid Hoffman, David Sachs. These guys really don't need any introduction. Elon Musk, of course, is among them. To what extent are these folks still in your universe right now?
Well, for the most part, we've gone separate ways. Even many of the people within so-called mafia. I've moved from Silicon Valley to Miami, so I have sort of a new set of people that I'm working with.
Some of them have too.
Some have, yes, that's right.
And some of them have moved back to San Francisco too. Maybe Texas, some of them as well.
Yeah.
Okay, so on that, and sort of on payments,
yes.
I thought of you the other day because the crypto firm Kraken
yes.
is launching this competitor to Venmo and to the Cash App, essentially using the blockchain to transfer money. And I'm wondering how you look at that as somebody who really pioneered technology for sending money over the internet. Is the blockchain, is crypto really going to disrupt that?
I think the blockchain is very good for some purposes. I don't have much use for cryptocurrency because we have plenty of currencies that are very good. But the blockchain can do a heck of a lot, particularly on international money movement, because we're looking at SWIFT, which takes at least a day, sometimes multiple days, to get significant money moved from America to Singapore. And with the right crypto networks, you can do it like that.
That easy?
Sure, and that fast.
So it sounds like Western Union gets disrupted in a situation like that. That's what it sounds like to me.
Not quite, because Western Union is all about the last mile. And Western Union is doing lots of little payments, and in most of the world, it's actually agents, physical agents, who are taking the money and giving out the money. So that's a very different thing. But if you're doing bank-to-bank payments or business-to-business payments...
So the big guys.
The big guys.
Yeah. So does it happen eventually?
Oh, yes.
Yeah.
Yeah. There is no reason whatsoever in this day and age it should take multiple days to get money from here to there.
Amen. But
I mean, we were doing 25 years ago.
Yeah.
We were moving money instantly, skittering it around the world at PayPal. It's not that hard.
So are there going to be big players in it?
I don't know. I don't follow. I don't follow what's happening.
Yeah.
Ripple took a stab at it for a while, but I haven't heard anything about that in a while, so I don't know.
Just got about 30 seconds here. I mean, AI is obviously the trend that everybody talks about in terms of its impact. Is there anything else, though, outside of AI, or is it really just about artificial intelligence, which is not a new thing, but it's certainly on a different level today?
Yeah. So I'll just say quickly, in what I'm doing, Evergreen Wealth, we're doing two things. First of all, we're using AI to revolutionize how financial advice can be delivered, but the other important thing we're doing is bringing tax considerations into investment management, because it's not what you earn, it's what you keep that counts.
Increasingly, right? It really, yeah. No, it's huge. We always talk about that in terms of the market. You don't want to be, it's not just about what you gain, but it's also making sure you minimize your losses, right? Great. Thank you so much.
Thank you.
Really appreciate it. Bill Harris, former CEO of PayPal and so much more, currently founder and CEO of Evergreen Money, which we talked about, Evergreen Wealth as well. So delighted to have him here at Uncharted Community Summit.
Holding on to gains on the S&P 500 right now, up just fractionally, ever so slightly, less than 0.1%
not
down.
what it looked like earlier.
No, but you know what? There's an hour to go.
There is an hour to go. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening to Bloomberg Business Week Daily. Carol Masser, Tim Stenovec, live at the Uncharted Community Summit. We're live out in Southampton. It is gorgeous. It's a little bit windy, but the sun has come out.
I see some white caps out there.
I totally saw some.
Would this be a sailing day for you if you weren't sitting here?
I don't know. I'm a little chicken when it gets a little windy.
It's a little windy out there.
When the winds hit 20, 25, I get a little nervous.
Is it that windy?
I don't know.
I mean, maybe out there.
White caps start coming, I would say, in like the upper teens.
Okay, well, there they are.
It's a little windy.
We're working, though. We're working. All the people who've been, like, texting me and sending me IBs about, like, hey, tough life, you know, sucks to be you. We're working hard here.
Did you just say that on air?
People have been sending me this all afternoon when they're seeing where we are.
I just ignore them. See, this is why I don't read messages.
Okay, well, we're working hard here, okay? We're working hard, and we're also keeping an eye on what's happening with the markets because we're seeing the rally that we saw earlier fade as a result of the president's comments that we got a little earlier.
Yeah.
Down 0.1% on the S&P 500. Those comments about ending trade talks with Canada. The NASDAQ composite down 0.3%. The Dow still up 0.5 percentage point.
All right, so progress on U.S.-China deal, but maybe not so when it comes to Canada. These are all important. I'm Carol Masser. He's Tim Stenovec. You are, of course, listening and watching Bloomberg. Let's get a check on some of the stocks on the move. For that, let's toss things over to Bloomberg News cross-asset reporter Denitsa Sokova. She's back at Bloomberg headquarters in New York City. You are watching some stocks on the move. Nike, man, it's been off and running. See what I did there?
Let's start with Nike. The ticker is NKE. The stock rose as much as 18% today. That was actually the biggest intraday jump in about 26 years. Now it's up about 14-15%. Nike said is starting to ease and forecasted a more than expected drop in revenue. And obviously, this sent the stock on a massive jump today. We have had the new CEO, Elliott Hill, having so many strategic moves, refocusing on sports, clean up inventories. They've been trying to lure more women into the brand. We have Nike schemes, which actually there was a delay, which wasn't great news for investors, but also that Nike is returning to Amazon. They're expecting to have their own featured store. So there are all those developments, which a lot of them have been derailed with tariffs. The stock is actually down 5% year to date. But today we're seeing really big relief and optimism, and really one of the best days in quite some time for Nike, up about 14%.
I think a big question that a lot of people have is, okay, what does this revamp look like under Elliott Hill? How long is it going to take? As we talked with Poonam Goyal yesterday, why aren't they selling down this inventory as quickly as we thought they would?
Yeah, that's, I think, a big situation. But I think what she also said earlier this morning is that, you know, they got more clarity about that and kind of what the company's doing. And I think there was more specifics and more detail that made investors certainly feel much more upbeat. All right.
Wait, I just want to repeat, 15% to the upside on daily today.
But the stock's still down, I think, about 4% this year. So it's just a reminder of how much they've had to come back. Hey, I feel like this whole week we've been talking about driverless cars. There's so much going on. Denitsa, Uber and Lyft are on your radar, and those are, you know, super easy tickers as well.
Super easy ticker. Uber is UBER, and Lyft, of course, it says LYFT. The stocks are down. Uber is down about 3%. Lyft is down about 2%. And it's interesting. It's coming off a note by Canaccord, which is seeing potential for rapid disruption, saying that robotaxi complex could disrupt the ride hail. This is kind of an interesting thesis because we have seen Uber partner with Waymo. We have seen those companies working together so far. So this is one of the first big costs we're seeing for disruption, and that's also moving the price. The challenge for Uber and Lyft, the analyst says, is how long a hybrid network will stay relevant and what value can they add in that paradigm shift. Of course, we had the news about Uber yesterday, looking for their original founder to actually acquire and look into their own company for automatic driving. We're yet to see if that will happen, but the competition is heating up there. And today we're seeing pressure down for two companies that are actually having a great year. Uber is up about 50% year to date. Lyft is up about 20% year to date. But this is raising questions about the new paradigm. And, you know, investors are very sensitive and they always want to stay ahead of the new trends.
Yeah, I mean, and Uber sold off its advanced technologies group, 5 years ago at this point, Carol? 5 years ago, which Travis Kalanick kind of saw the writing on the wall. When he started Uber, he started working on this technology. It was a lot of money. It cost a lot of money. Investors didn't love it. Dara Khosrowshahi sold it off, so kind of what's old is new again. That's what's happening right now.
It's really kind of fascinating to see like this whole cycle. One more real quickly.
Estee Lauder, the ticket is EL. That's one company that needs relief really badly. It has 3 consecutive years of losses. It's up 7% year to date and 2% today. It's coming off HSBC upgrade, saying that the company this is the end of the downgrade cycle. We saw a similar note by Deutsche Bank that the company is diversifying beyond China. So some optimism for a stock that has been under a lot of pressure for quite some time.
All right, Denitsa Sikova, cross-asset reporter at Bloomberg News. Thank you so much. Check out our Stock Movers podcast, 5-minute episodes, winners, losers. You can find it on Apple, Spotify, or anywhere you get your podcast. If you need just something lovely on this Friday, check this out, everybody. Yeah, that's the pool. Tim's
Somebody else just sent me a message on IB. Tough day at the office, looks like.
We're working really hard.
Totally.
I'm just saying, the breeze, it's a little tough. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The nation's highest court has limited the use of nationwide injunctions, reining in judges' ability to issue sweeping orders that stop or delay presidential policies. President Trump celebrated the news as Linda Kenyon reports.
President Trump calls the ruling a great victory. It states individual judges cannot grant nationwide injunctions, in this case involving birthright citizenship.
These judges have attempted to dictate the law for the entire nation.
The president said birthright citizenship enshrined in the Constitution should not apply to children born in the U.S. to parents who are in this country illegally.
That was meant for the babies of slaves. It wasn't meant for people trying to scam the system.
As for the merits of the case itself, that's up to the Supreme Court, probably in the fall. Linda Kenyon, CBS News, the White House.
The Supreme Court also sided with Texas in its legal battle with the porn industry over age verification for minors. Chris Fox has that.
By a vote of 6-3, the U.S. Supreme Court decision to let the Texas law stand now allows states to regulate access to online pornography to protect children, despite arguments that it infringes on adults' First Amendment rights to access the material. Texas State Senator Angela Paxton sponsored the law.
House Bill 1181 protects our children from pornographic material on the internet using age verification for explicit content.
The Texas age verification law was originally struck down by a federal district judge. Chris Fox for CBS News, Austin.
President Trump said today he's terminating trade talks with Canada over its tax on technology firms that's set to go into effect on Monday. He said earlier he'd be notifying countries that haven't yet reached trade agreements with the U.S.
At a certain point over the next week and a half or so, or maybe before, we're going to send out a letter. We talked to many of the countries, and we're just going to tell them what they have to pay to do business in the United States. And it's going to go very quickly.
California is dealing with a rise in certain hate crimes, as Matt Bigler reports.
Hate crimes against the LGBTQ community spiked nearly 14% last year, the biggest increase in the annual California hate crime report. Attacks against Jews saw the second largest increase, up 7.3%. San Francisco District Attorney Brooke Jenkins is encouraging all Americans to report hate crimes, no matter how small.
Even if someone is espousing hate, we need to be aware of it as law enforcement, and so I do continue to encourage the public to report.
Overall, the report finds hate crimes increased 2.7% in California from 2023 to 2024. Matt Bigler for CBS News, San Francisco.
The Dow Jones Industrial's up 205 points. This is CBS News. French astronomers have discovered a new planet outside our solar system. Michael Wallace has the story.
It's 110 light years from Earth and orbits a star known as TWA7. It's the first planet to be spotted by the James Webb Space Telescope since its launch 4 years ago.
It is 10 times lighter than the planets that have been imaged so far.
Anne-Marie Lagrange at the French National Center for Scientific Research says the planet is young, about 6 million years old, with a surface temperature of 120 degrees. She's hopeful James Webb is just getting started.
We could still be able to detect even lighter planets.
Michael Wallace, CBS News.
The U.S. Navy is renaming a ship that honored gay rights icon and assassinated San Francisco politician Harvey Milk. The ship will be renamed for Oscar Peterson, a sailor who was posthumously awarded the Medal of Honor for actions during World War II. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
On this Friday, the trading, a very different market picture from earlier today. We are seeing stocks under pressure, and there's concerns about some of these trade agreements that the president is trying to get done. Looks like some problems when it comes specifically between China and not China. China's the good thing. Canada and the United States. So that has certainly put some pressure on the trade today.
Yeah, we're down on the S&P 500 just ever so slightly right now. We're in the red on the NASDAQ composite, off our worst levels of the day, but very much so off our best levels of the day. About an hour and a half ago, we were set to close at a new record today, but that might not be the case. Hey, we're going to talk about all of this, especially the president abruptly walking away from talks with Canada, our neighbors to the north. Josh Wingrove is going to be joining us in just a few minutes.
Yeah, looking for that. Looking forward to that. And how is this trade uncertainty affecting capital markets? We've got the vice chair of the New York Stock Exchange joining us right here on set in Southampton. He is one of the individuals that is attending the Uncharted Community Summit. So looking forward to see what he has to say about the marketing or relation with the trading environment.
Well, speaking of the environment, sometimes we like to check in on things on the highest end. You know, we're in the Hamptons. The jet-setting crowd is out here.
I know where you're going.
We're going to the skies. Actually, Gulfstream's a sponsor of this. Yeah. Sentient Jet as well. We're going to speak with the folks at Sentient Jet a little later to get an idea of how the private aviation industry is going right now.
All right, a lot coming your way in 120 minutes. Hey, folks, though, let's get back to New York headquarters, Bloomberg, and see what Amy Morris has to say. She's actually in Washington, where it feels like so much of the news is happening today. Hey, Amy.
You're absolutely right. Hi, Carol. President Trump says he immediately will suspend trade talks with China over its plans to continue with its tax on technology firms. He called it a direct and blatant attack on our country. Trump posted on Truth Social that Canada has just informed the U.S. it's sticking to a plan to impose the tax set to take effect on Monday. That slammed the brakes on the markets. What was a rally is now slipping into the red. We do check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside. It is up like 2 points right now. NASDAQ is down 0.1%. The Dow is up 0.5%. The 10-year Treasury yield at 4.28%. The 2-year yield at 3.74%. Citigroup's Wealth Division CIO Kate Moore is not comfortable with the current stock rally because of warning flags like declining earnings expectations and concentrated gains around a few companies. She's concerned investors are shrugging off the impact of tariffs and are misguided in their enthusiasm for potential interest rate cuts. The European Union and the U.S. believe they could reach a trade agreement before the July 9th deadline, when the U.S. is set to impose a 50% tariff on nearly all EU products. And the Fed's preferred gauge of inflation, some new numbers. Bloomberg's Michael McKee with those.
We're pretty much exactly what economists had forecast, 0.1% on the headline number and 0.2%, a little bit higher inflation on the core. So if you did want to make the case for a July cut, it gets a little bit harder now because the Fed is further away from its 2% target.
Bloomberg's Mike McKee. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek.
Hey, thanks so much for that update, Amy. Do appreciate it. You mentioned the big headlines there. The president said he's ending all trade discussions with Canada due to the country's implementation of a digital services tax and threatened to impose a fresh tariff rate within the next week. Carol, we got some good news from a framework with China.
Right.
We heard some details from that today. We heard details last night on Bloomberg from Scott Bessent. Kind of tough to keep track of it all.
Yeah, exactly. So maybe 2 steps forward, 2 steps back. I don't know how you kind of gauge this, but Josh Wingrove has to keep track of it all and help us make sense of it. Bloomberg News senior White House correspondent. He is there in our Washington, D.C. bureau. Josh, it's a lot today, but tell us about, first of all, let's go to the bad news, because it does feel like this is what's pressuring markets today. What's going on, and what do you know about U.S. and Canada specifically when it comes to negotiations?
Yeah, the news here is kind of out of left field, but Trump is taking issue with this Canada digital services tax. This has been like a long-running thing, and it's not new, but the first payments are due next week, as our colleagues in Toronto are writing about. And so this is sort of kind of dovetailing with this news today of some sort of G7 agreement on global taxation and the global minimum tax that Trump and the Trump administration are sort of touting. I don't want to get too buried in the weeds. Essentially, Trump thinks that the Canadians are pulling a fast one on him, more or less, and proceeding with this at a time when there's other questions about how they should be taxing these kind of things, and that's what led to this. And it's kind of a surprise because Canada was one of, a handful of countries that does not have a tariff deadline coming up, right? They are not included in the July 9th pause, with about 6 countries and the EU set to face potential higher tariffs on July 9th. China, Canada, Mexico have always been, or at least have lately been, separate from that. And so the question here is, what now? The current Canada tariff rate is 25%. That is to say, Trump's tariff on Canada is 25%, but there is a major exemption for goods traded under the USMCA trade pact. So a couple of options here, I suppose. 3, I guess. One is this could be a bargaining tactic, and they could reach some kind of a deal. 2, Trump could seek to raise that rate that applies to non-USMCA goods, so from 25 up to a different number. For instance, he's previously doubled the rate on steel and aluminum to 50 from 25. Or he could try to claw back some of those exclusions on USMCA trade. I think that third one would get a lot of blowback from American industry, in particular the auto industry, who were relying on these pretty integrated supply chains and saw those exclusions as pretty key. But this is a pretty explosive development here. Of course, just, barely over a week since the G7, when Trump and Prime Minister Carney of Canada seemed to strike a pretty upbeat tone. But Tuesday is Canada Day. This is not a way to celebrate, I guess. The Canadians are going to be upset by that, but we'll see. We'll see.
It's Friday, Josh. A lot can happen between now and Canada Day, okay? I want to go into some details here. A group of 21 U.S. lawmakers wrote to President Trump earlier this month asking him to push for the tax's removal. This tax is similar, as you mentioned, to one implemented by some other countries, including the UK. It's equal to 3% of the digital services revenue that a firm makes from Canadian users above $14.6 million. So this would apply to companies such as Meta Platforms and Alphabet. I want to zoom in on what you said was sort of option number 1 here, the negotiating tactic. Is this the art of the deal? Because we've seen the president do this repeatedly over the last few months. You can remember what happened on so-called Liberation Day and the way that he backed away from some of those tariffs and put a pause on them. But he did get some countries to move.
Yeah, that's right. And we could be seeing that here. I should note also the Canadians thought there was like a 30-day clock, or at least they said so on the heels of that G7 meeting, that we're almost, halfway through that 30 days. So Canada wanted some kind of a deal within 30 days, not only on that 25% and the exclusion for USMCA, but the other sectoral tariffs, in particular autos, steel, and aluminum, and the impact those could have. Trump has exempted USMCA autos, but may still tariff auto parts that are USMCA compliant. That's going to be a big deal for the Canadians. So they're looking for some kind of grand bargain here. And I think if it is option 1, if this is a bargaining tactic, Trump is putting another thing on the table here and saying this has to be part of any sort of grand bargain. Prime Minister Carney has been less quick than his predecessor, Trudeau, to hit with counter tariffs. He's been much more measured. But the flip side of that is he has room to do them if he wants to. So the Canadians right now have been silent last I checked in response to the president. We'll see where it goes. But he could be looking for leverage here. But the deadlines here are really kind of made up. Trump says 7 days, but there's nothing holding them to that. He doesn't have to do anything within 7 days. The Canadians have said 30, but likewise, there's nothing holding them to that. As opposed to the other countries, the July 9th stuff, that is on the books. Those tariffs are going up on July 9th unless Trump does something to change it. So those ones are a different sort of landscape.
Well, let's go there, because the EU and the U.S. believe they can reach a trade agreement before that July 9th deadline. That's when the U.S. is set to impose a 50% tariff on nearly all EU products. That seems like maybe a very positive sign. Is it a positive sign? Because that's a big one.
It seems to be a positive sign. We've got on-the-record comments from Howard Lutnick, sort of striking an upbeat tone about it. Our colleagues Alberto Nardelli and Jorge Valero in Europe have some reporting today on the European view of it. They sound equally optimistic. What's not clear is are they reaching kind of like a China deal, like a framework type of deal, a pathway kind of deal, or are they actually getting down to brass tacks and getting something more comprehensive? That's not clear. And today we've had comments both from Trump and Bessent, Secretary Bessent of the Treasury, sort of signaling a two-tiered approach. Bessent saying, look, we've got like 12, 10, 18, something like that, big trading partners, and they might look to wrap that up by September 1st, he said, Labor Day. And that raises the prospect of extensions for some countries, bigger countries, maybe ones that are making headway. On the flip side, it's about 6 countries in total that are facing a tariff hike. And Trump said today, look, I might even raise them before July 9th. We don't expect that, but he sort of threw it out there. And he said that he kind of wants to do maybe even 25% tariffs, and it's Bessent's nicer than him, and Bessent doesn't want to do it. And so right now we've got this sort of multi-track thing, right? You've got a group of countries that maybe are smaller trading partners that are facing a July 9th deadline, and Trump is signaling that he might want to put a higher tariff on them. Then he threw out the number 25% today, up from the baseline 10. Then you've got other ones, presumably including the EU, that will either reach a deal or maybe get an extension, with talks continuing throughout the summer. Then you've got the China situation. They put some ink to paper a couple of days ago on their framework, but there's another deadline coming in August, so there'll be a fresh sort of mile marker there. And then you've got the Canada one, and I should add the Mexico one. Both of those not with firm deadlines, but now Trump pledging something on 7 days in Canada and Mexico separately. Rumors of some kind of steel deal, and we don't know where that stands right now. So a lot of moving parts on this. Remember, they talked about 90 deals in 90 days. So far, we've got like 2, that are not necessarily full baked. So this is complex stuff.
All right.
Complex stuff. But Trump loves tariffs. Remember that.
You're sitting down to dinner. Josh, you're sitting down to dinner, or you're, at a bar with a friend tonight, and they say, hey, are we making progress on trade, the United States? They actually getting something done in a good way? Do you say yes or no?
No one hangs out with me anymore because I just talk about this stuff all the time. But I think yes. I mean, Bessent is talking about wrapping this all up by September. So if we could potentially, it seems yes, they could be. But remember, Trump is clearly itching to want to just send a unilateral number, Liberation Day 2.0, maybe a number not as high as the initial numbers he put out, but higher than 10%. And so that combined with the fact that we still have more sectoral tariffs coming, and the fact that he's demonstrated a penchant for wanting to just raise them on his own, like with steel and aluminum, the number of tariffs look like they're going to go up, not down, going forward. I think that markets should be aware of that.
Okay. Hey, Josh, for the record, Tim and I will hang out with you anytime.
I was just going to say the same thing.
You name the place, you name the
it.
time, you name the date. We're going to be there. Josh Wingrove, Bloomberg News Senior White House Correspondent, joining us from our Washington, D.C. Bureau. A lot to keep track of. You are listening and watching Bloomberg Business Week Daily. We're live in Southampton at Uncharted. This is Bloomberg.
one on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's HometitleLock.com/Bloomberg. President Trump says he's immediately suspending trade talks with China over its plans to continue with its tax on technology firms, which he called a direct and blatant attack on our country. Trump posted on Truth Social that Canada had just informed the U.S. it is sticking to its plan to impose the tax set to take effect on Monday. That has slammed the brakes on the markets. What was a rally is now pretty much flat. The S&P 500 little changed on the upside. NASDAQ completely flat. The Dow is about 0.6% higher. The 10-year Treasury yield at 4.28%, the 2-year yield at 3.74%. And Republicans have reached a tentative deal to raise the limit on the state and local tax deduction, or SALT, to $40,000 a year for a 5-year period. That's according to people familiar with the matter. It's not immediately clear whether enough of these so-called SALT Republicans in the House will accept the concession and drop their threats to block President Trump's massive tax and spending package. President Trump says his July 4th goal to pass the bill is not an absolute deadline, giving Republican negotiators a little more wiggle room. Trump is planning to stay in Washington over this weekend to exert pressure on lawmakers to reach a deal. Consumer spending declined 0.3% in May, the most since the start of the year, amid elevated uncertainty around the Trump administration's economic policies. Consumer sentiment rose sharply in June to a 4-month high, with the final June sentiment index increasing to 60.7 from 52.2 a month before. For on-demand news 24 hours a day, subscribe to Bloomberg News Now to get wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovic.
Amy, thanks so much for that update. Let's talk capital markets because that's what we do here at Bloomberg. I don't know if you have noticed this, Carol. Well, I know you've noticed it. But IPOs have kind of been on a tear, led by triple-digit % increases for Circle and CoreWeave. 2 of the year's 5 largest IPOs on U.S. exchanges. This year's class of debutantes are trading up by a weighted average of about 53%. This is according to data compiled by Bloomberg. Full disclosure, just a little earlier this week. Kind of a market difference from what we've seen in recent years. It's still not what I think investors wanted to see.
But what's great is there's momentum, but it's also performance, right? Investors are staying with these names. We've got a great voice on this.
Michael Harris is back with us. He's got his finger on the pulse of everything happening in capital markets. He's vice chair and global head of markets at the New York Stock Exchange. He joins us on site here at the Uncharted Community Summit in beautiful Southampton, New York. Last time we spoke with you was at another event.
Equally as beautiful, by the way.
Equally as beautiful, downtown New York.
Exactly.
So. That was back in early March. A lot has happened since then. We've kind of had a round trip when it comes to equity markets. There were some concerns a few weeks after we spoke about companies pulling their IPOs as a result of what was happening with trade. Those IPOs, they ended up happening in May and June. How would you describe the environment right now?
I mean, I think, the round trip that you described is exactly the way to think about it. We've seen a complete 180-degree turn in terms of sentiment, in terms of where the market backdrop is. And it's playing out in the IPO market on a couple different factors. On one hand, we're seeing the subscription levels in terms of interest on IPOs are through the roof. So these deals that are coming to the marketplace are multiple times oversubscribed, interest from a wide range of investors. The second part of it is when they do come to the market, the actual pricing outcomes are oftentimes very much in the favor of the issuers. And then the third part of it is the performance, which you mentioned just now. The performance on day one, the follow-through in the aftermarket, all the way through the offer to today's performance has been absolutely phenomenal. So that really keeps the cycle in terms of investor interest continuing to go.
Right.
And so what we're seeing that play out is really in our backlog. So we see a very active summer, we see an active September, and we think it's going to be a very active 2025 going forward.
What does that backlog look like? You say active. I mean, how backed up is it? And how eager are these that are backed up, ready to go?
Yeah, well, for the first part, you're seeing, on one hand, a lot of companies that were delaying their IPOs because of some of the tensions that happened in the beginning part of the year. Right. So some of them have taken a step back, and they were kind of waiting to see, on one hand, just what happened from a geopolitical standpoint, how things were playing out in terms of just the tensions that were in the air. And also they're waiting to see from the investor community what the reception was going to be for some of the more recent recent crop of IPOs. So we've gotten those results. Those results have been, in many cases, much better than they thought they would be. And so they're now ready to push forward. The other part of it is what we're seeing now is a much more diverse array of companies that are going public. You know, when you and I talked, we were talking about who would be the most likely companies to go public, and they would be likely the more defensive names. Now we're seeing that start to broaden out. So our pipeline looks more diverse than it was back in March. It looks also for larger companies that are also going to be coming. So really, in all respects, it tends to be a very healthy outcome.
How has that pipeline diversity shifted in recent years? I remember when I spent 3-4 years working from the floor of the New York Stock Exchange as a reporter, and there was a period in 2017, 2018, no joke, no exaggeration, almost every other day, there was a Chinese company going public in the United States. These were companies we had never heard of. There were companies that we haven't heard from since. I mean, it was really, really wild times. Then there was this crackdown on a lot of these companies that were listed from China in the U.S.
Yeah.
Has that business completely dried up for you? I mean, Shein has filed confidentially to
Listen,
IPO in Hong Kong.
We saw that today.
Yeah.
You know, it's interesting. There's still a class of companies that are, for the most part, micro-cap in nature. A lot of them domiciled in China that are still coming public. That's a class of companies that, quite frankly, we at the New York Stock Exchange really don't look to. Some of our competitors tend to focus on that market, and we've seen a number of articles, whether it's from the Wall Street Journal, Financial Times, or others, that have really pointed to some of the problems that have become as a result of that. So that's not something we really focus on, but we are still seeing some of those companies come to the public markets. But I think there's some challenges with that, and there's going to probably continue to be challenges with that going forward.
But still out of China?
Some.
Are they choosing to list in other areas of the world?
Yeah, you know, it depends a little bit on market cap. It depends on the sector. I think what you are seeing is a bit of a preference for many companies just for liquidity. So the U.S. market still continues to be a place where they would like to list. But for larger names, the home markets continue to be also very attractive. You know, cattle being a great example of that early in the year. Shein looking to Hong Kong relative to London. So depending on the name, depending on the sector, depending on the specifics of those companies, home markets can also be a very viable alternative too.
Michael, in some of the cases with the IPOs, we've really seen quite a pop on that first day of trading, right? That's a good sign. You know, we want to see that. As certainly a company that's going public wants to see that. But it always begs the question, were they too conservative in, you know, the numbers that they put out there? I am curious, what are the conversations that you're hearing from those folks in those companies that are looking to go public? Would they rather be a little conservative going in and making sure that that's a good first day of trading?
Yeah. You know, I think when you talk to people in the world of IPOs, whether they're bankers or lawyers, you know, it's often talked about being more of an art than a science. And I think there is a little bit of truth to that.
Yeah.
There's a balancing act that always has to happen between getting the right investors, those being the ones that are going to be supportive of your company, not just on day one, but making sure that there's adequate follow through as you think about companies that are going through their cycles of maturity as a public company.
Right.
And also companies that are investors, rather, that are going to be supporting the company from a liquidity perspective. And there's a balance of the two in the aftermarket. And the reality is, until you actually get to that stage where you're in the pricing room and you're actually confronting with management in terms of what the dynamics look like, it's sometimes tough to tell. And so I think the underwriters do a great job of being able to offer what those trade-offs are going to be to management teams. Ultimately, the management teams are the ones that have to make those really tough decisions. But I always think about it in terms of the IPO process. Ultimately, it's a day one event. Right. And really what management teams, what their stakeholders need to focus on is really trying to set up a company for success over the long term and not focus on necessarily the day one performance. Obviously, you want a great pricing outcome, but really you're managing this company for the long haul. It's not really just for the day one IPO event.
Can you give us an update on the New York Stock Exchange Texas? Launched this year. We talked about it back in March.
Yeah. We have, multiple companies that are now listed there. We have a fairly healthy pipeline of companies that are going to be going listing on the exchange over the next several months. We are very close to signing a lease in Dallas. We're getting very close to actually naming the person that's going to be running that business. So it's really continuing to take on momentum, and so we really are excited about it.
Do you think it's perhaps a hedge in New York City losing its place when it comes to capital markets? And I ask this, kind of came into sharp relief this week with, I think a lot of people would argue, with what happened in the Democratic primary for the mayoral election. And we don't know who's going to win, but we certainly have a lot of outspoken billionaires who've talked about concerns when it comes to capital markets here in New York and the position of New York City as being the epicenter of Wall Street.
Mm-hmm. Yeah, I mean, for Texas, the way that we've thought about it is when we look at our own listed community and we look at the number of companies in terms of where they're domiciled, Texas really stands out. It tends to be the area where we have the most number of companies from a really diverse range of sectors that are represented. And so when we kind of really thought about it from the perspective of what Governor Abbott's doing to try to make sure that the ecosystem of companies within Texas is vibrant and, it intersects with a lot of what we're trying to do in terms of getting a great environment for our own listed community, it really made sense. So we think about this more from the long-term perspective of offering the best environment for our listed community, less in terms of like a short-term strategy in terms of what might be happening in the New York ecosystem. So we still are big believers that New York continues to be a great place for capital raising and also for companies to be domiciled.
But longer term then, does that mean, and I'm sure you've had questions about this and I'm sure we've talked about it, does it expand the model? Like, do you anticipate that there's going to be other major cities that you guys will also have an exchange?
It's hard to know. Looking at the crystal ball, it's really hard to know. Like, we're really just focused on kind of where we see the greatest opportunity for our community right now. But we're always forward thinking in terms of really trying to see where the greatest opportunity results for our community. Another great example that I'd point to is extended hours trading. We were the first exchange to look at 22/5 trading as an opportunity.
Yeah.
We're really happy to see the SEC kind of move towards that. And so we think that there's going to be other opportunities where we can try to take a leadership position to try to extend our lead.
No, we need less because that means days off for us. Because we need a break. We work.
That's the bad news for you guys.
Just so you're
going to be on 22 hours a day. That's the downside.
There used to be times, except for M&A deals, weekends were quiet. The summer was quiet.
Not anymore, right?
Not since the great financial crisis has that. It's just been kind of nonstop.
It's been exciting.
Yeah. White House, though, in terms of volatility, that really is the thing that impacts the markets. And that's what ultimately will impact, right, in terms of new listings and stuff. Everybody's watching.
I think it's a combination of what you're seeing in Washington. It's a combination of what you're seeing with the Fed. And it's a combination of what you're going to see on the company level in terms of earnings.
Yeah.
Right? But in many respects,
three big things.
That's not that different from what it's always been. Right? And so I think that the way that we've always tried to approach it is we always want companies to try to look at the trade-off of all those three things. What's the right trade-off for themselves as they think about being able to build great companies? But ultimately, investors are going to want to invest in great companies that can weather those cycles regardless.
All right. Going to leave it there. Michael, thank you so much.
Hey, thank you. It was great seeing you both.
Fun to check in with you again. Michael Harris, Vice Chairman and Global Head of Capital Markets at the New York Stock Exchange, right here on site at the Uncharted Community Summit. It is underway in Southampton. A lot of conversations happening behind us.
I see people making their way to the beach. You were on the beach earlier today.
You can have a conversation on the beach.
Were you really on the beach earlier?
I did. I walked with Michael Loeb.
How was it?
It was beautiful.
Yeah, it looks really
nice.
nice.
Kind of the way you should start your morning every day. Go anywhere. Tim and I coming back right here. This is
It's 3:40 on Wall Street. I'm Amy Morris. Republicans have reached a tentative deal to raise the limit on the state and local tax deduction to $40,000 a year for a 5-year period. That's according to a person familiar with the matter. It was not immediately clear whether enough of the so-called SALT Republicans in the House would accept the concession and drop their threats to block President Trump's massive tax and spending package. Now, the president says that July 4th goal to pass his tax bill is not an absolute deadline, giving Republican negotiators additional breathing room. He plans to stay in Washington over the weekend to exert pressure on lawmakers to reach a deal on the bill, which remains divided over several issues. President Trump also says he has immediately suspended trade talks with Canada over its plans to continue with its tax on technology firms, which he called a direct and blatant attack on our country. Trump posted on Truth Social that Canada had just informed the U.S. it was sticking to its plan to impose the tax set to take effect on Monday. And that slammed the brakes on the markets. The S&P 500 now 14 points higher. NASDAQ up 38 points. The Dow up 311. The 10-year Treasury yield at 4.28%. The 2-year yield at 3.74%. University of Virginia President James Ryan is stepping down amid a Trump administration probe of the school's diversity, equity, and inclusion efforts. That, according to people familiar with the matter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Everybody, we have just about 18 minutes
to be outside. Can I just say that? Like, people keep texting and asking, like, how is it? A tough life? And I'm like,
beats being at the office.
Well, I'm still working.
We're still working.
But it's really nice to be working outside. Like the breeze, kind of a beautiful day here in Southampton.
I know. Listen, anytime I can get some fresh air, I'm a happy girl.
We're at the Uncharted Summit.
We're working. And so is our next guest. Allie McCartney is with us. She's managing director and at also private wealth management at UBS. She is working, and we're curious to see what she gets out of this event. Like when you come here, hello.
Yes.
What do you get out of an event like this?
So UBS and I traffic at the intersection in liquidity events and in individuals. And so what does that mean? That's entrepreneurship. And so one of the beautiful things about this event and about our partnership with it is Michael Loeb opened by saying, this is a celebration of entrepreneurs and entrepreneurialism, right? And so if you go through all of the things that are happening in our world today, all of the trends, deglobalization being a big one, right? Where does wealth come from in this country? It's intellectual property. It is 6 million businesses founded last year. It is being at these events and having funders and founders meet, providing very valuable networking opportunities. And for us to be able to be supportive of that community full stop is really the bread and butter of what we do at UBS.
Does it give you new opportunities to bring new money into your firm? Or is it more like, okay, when I'm allocating my clients' assets, I'm thinking about these alternatives because I talked about these types of businesses with people at this conference?
So yes and yes. I would say there are 3 things it does. It is certainly, a prospecting, rich environment in terms of there are people here who, obviously we know the numbers of the success of startups and franchises, but some of these people are going to be the next unicorns, right? So there's that. The second is it allows me to learn about AI or why the founder of Tesla, founded Tesla and what he's thinking about now. And then the third thing is it allows me to find new opportunities for myself and my clients to be outside of this environment, both educated and proximate to the new trends that are driving sort of where the puck is and how we'll invest, for sure.
It's funny you see the founder of Tesla because Elon Musk was not actually the founder, was he?
Well, so no.
Or what did he?
So it was very funny because the first panel was someone who's just spent 7 months in the White House.
Yeah.
And so Elon Musk was the topic of conversation there. And then the next man after was the founder of Tesla, who
Martin Eberhard.
Who very elegantly decided not to answer that question.
He did?
Yes, he did.
Oh, that's really funny. You know, what's funny, too, is when I think about wealth management, you do have, I'm assuming as clients, a lot of folks that are founders, and whether they're looking to sell their company, find a deal, or maybe you have other clients who have money they want to put to work and they want to have a piece of a company. A lot of that is what goes on, right?
Oh, a lot of that is what goes on. So I think, like, if you think about the path of a founder, of an entrepreneur, right, you have an idea, there's something disruptive, there's some challenge or problem you're trying to solve in the world. And, you know, we were learning today that most people self-fund that by using credit cards, personal assets, and their 401k, right? They make less than $100,000 for years and years and years. And they are just so embedded in their company and the mission and the branding that they're not thinking about the tax consequences, whether they can take advantage of qualified small business stock. Could the business be stuck in a marriage in court and decided by the state of California or Florida if they don't have a prenup? So what we do is we say, look, if you are extremely successful, you're going to get to a liquidity point where some lawyer or some general counsel or Anderson Tax is going to say, have you talked about the planning and the this? And at that point, you can maybe add a couple % of value. But if you can find these people as they're stuck in what I call the valley of death, sort of that middle part of building a business, and you can get an hour with them just to say there are a couple things we can do from an investment perspective, an entity perspective, and a tax perspective, that if you are as successful as you think you are, you can protect yourself and investors, and you can make your net much bigger than what it would be otherwise.
As you know, entrepreneurs are not focused on this stuff when they're starting a company. So if they haven't taken advantage of something like the QSBS, as you talked about, which I believe allows you tax-free up to $10 million. I mean, it's pretty remarkable.
It's pretty remarkable. There are there are 3 litmus tests that you have to pass.
But if they didn't set up the business that way initially, can they change it to actually get that benefit?
Yes. It becomes increasingly difficult as you take in capital, you have more LPs, etc. But there are many, many ways to do it. And I think most people know about that $10 million headline number. But the earlier you plan, and the more that can actually be protected by using different IRS discounting strategies, etc. So I've seen many, many times that protected. But again, so our goal is to try to be in front of entrepreneurs and support them, not only in funding and marketing and building their networks, but to try to get them either to think about, which is really challenging, or get them to sort of open up themselves to allowing someone to act on their behalf, even when they're not there yet.
So we'd be remiss to not ask you about kind of the macro environment and what that means for entrepreneurs right now. We've got about a minute and a half left. We're getting ready to wrap up the trade today. It's been a volatile one again, and we're also getting ready to wrap up the trading week. How do you feel about the environment? What do you tell some of your clients?
So it's a really hard environment in the following. So you look at your portfolio today, private and public, and your public portfolio just hit an all-time high. Your private portfolio, you haven't gotten as much capital back as you wanted. You've been in longer. It feels a little, but your values, your marks are still, they feel okay too. But you feel pretty precarious about both. And so that's affecting the way everybody at every income level is spending, investing, traveling, you name it. So the answer is, our market is priced to perfection from a trade perspective, from a geopolitical perspective, from a big, beautiful bill and spending and deficit perspective. The next, I think, 6 months in terms of the path that the Fed takes with interest rates, whether our president actually does put in a shadow Fed and what effect that has, what happens in terms of the July 9th trade date, right? We're probably at about 10% level of tariffs right now. That's different than the 38 we were on, thinking about on April 2nd. It's also really different than the 2.9 we came into this presidency with. So there are a lot of really macro trends that are going to very much affect the next leg from here in both public and private markets.
Great conversation. Allie, thank you so much. Allie McCartney, Managing Director, Private Wealth Management over at UBS, joining us here on Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we've got just about 7 minutes to go until we wrap up the trade on this Friday and, of course, for the trading week overall. We kicked off trading today. There was enthusiasm, a risk-on trade, that on news of a framework between the United States and China, specifically when it comes to trade and tariffs. That was seen as a big positive and also momentum to get other deals done. And then, of course, I don't know, it was around midday or so-ish that we saw the headline about negotiations between U.S. and Canada not necessarily happening, and that breaking down. And so then we saw markets take a turn for the worse. So again, these trade agreements, investors see these as very important because it's going to determine so much going forward, the framework for doing business between nations. And we'll see how it all plays out.
Well, speaking of nations, we are expecting to hear from the president, potentially scheduled for top of the hour. He's going to participate in a visit with the foreign ministers of the Democratic Republic of the Congo and the Republic of Rwanda. That's happening in the Oval Office. The pool has gathered.
Yeah.
If we do hear questions from the president or answers from the president, questions from the press about trade deals, we're going to go there live and we'll take you to those comments.
Yeah, he teed it up earlier,
Yeah.
I think, in his earlier comments and questions. So we'll see what, he might say before the weekend gets underway, right? Wasn't it a week ago we were talking about Iran and Israel nonstop?
Interestingly enough, it was a week ago that he was headed to Bedminster from the White House.
Right.
He made some comments on the tarmac in Morristown, New Jersey.
Correct.
About the threat that he personally faced and the people around him faced from Iran. it was then the next day that those B-2 bombers took off, and that we learned about the B-2 bombers that were flying west. It was a ruse to distract us from the B-2 bombers that were flying east to do the bombing later that evening. And then we all know what happened. Then he headed back from Bedminster to the White House on Saturday for a national security meeting, and then delivered remarks to the American people at 10 p.m. that
But
night.
my point is, a week ago...
Oh, you were making a point about the markets. Sorry. I thought you just wanted a play-by-play. I was thinking about the planes.
No, you're play-by-play. I know. You love that part. Who doesn't? I mean, because we've learned so much, right, about it. But a week ago, we were focused so much on geopolitics, and it's not that this and trade and tariffs aren't geopolitics as well, but it's different. But and then the Supreme Court decisions and what this all means for us domestically on a day where, as we talked with our Mike McKee earlier, Paul Sweeney and I, some concerns about the U.S. economy on some metrics.
I feel like you mentioned almost everything. There was one thing that I didn't hear.
What didn't I say?
Matt Miller always reminds me of it.
Salt?
No, well, yes, it's the bill.
Yeah,
What's
the
happening
bill.
when it comes to the bill? Ali McCartney, who just joined us from UBS, mentioned it. The so-called big, beautiful bill, that July 4th deadline. We'll see if the senators get on board, if the Senate gets on board. It sounds like, though, there are some hiccups there when it comes to actually the full passage of that.
It's always the thing when we're focused on something. Let's not forget there's so much going on, elsewhere as members of Congress try to figure this one out. And ultimately, the specifics will impact corporations, individuals, expenditures. We've heard that from some of our conversations that folks are watching this very closely. What kind of spending comes out of that massive legislation ultimately will impact maybe local economies. We talked about that when we talked about the Muni market, Paul Sweeney and I, because it was Muni Friday. I don't know if you
Oh, Muni Friday, yeah, bam, right?
But these are things that are going to figure out what sectors lead, what cities get hurt, what cities lead. It's a lot.
Well, 6171 is the S&P 500. That would be a record close.
Well, there you have
for
it.
the S&P 500. We are back at up again, up half a percentage point. And we do see, Carol, really almost every industry group, save for healthcare and energy, in the green right now.
Yeah, up 432 points on the Dow Jones Industrial Average. NASDAQ 100 up about 80 points. And Tim, of course, just talking about the S&P 500, that too has definitely moved off its lows of the session. What a ride on this Friday.
Yeah, looking at the stocks that are the best performers in the S&P 500, Nike up 15.5%, Boeing up 6%, Equinix, after the declines yesterday and on Wednesday, up 5.7%, Palantir down 9%, Coinbase down 6%, and Enphase Energy down 5%.
Investors have been snapping up some shares, pushing it higher, those major averages. All right, folks, do not go anywhere. We've just got about 2 minutes to go. We're going to wrap up the trade on this Friday and for the week overall. This is Bloomberg Business Week Daily. Carol Master, Tim Stenovic, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And we have less than 2 minutes until the closing bell on Wall Street. I'm Amy Morris. Republicans have reached a tentative deal to raise the limit on the state and local tax deduction to $40,000 a year for a 5-year period. As according to a person familiar with the matter, not immediately clear whether enough of the so-called SALT Republicans in the House will accept the concession and drop their threats to block President Trump's massive tax and spending package. President Trump says his July 4th goal is to pass the tax bill, but it's not an absolute deadline, and that gives Republican negotiators a little more breathing room. President Trump is planning to stay in Washington over the weekend to exert more pressure on lawmakers to reach a deal on the bill, which remains divided over several thorny issues. And this morning, we got the latest data on the Fed's preferred gauge of inflation. Bloomberg's Michael McKee with those numbers.
We're pretty much exactly what economists had forecast, 0.1% on the headline number and 0.2%, a little bit higher inflation on the core. So if you did want to make the case for a July cut, it gets a little bit harder now because the Fed is further away from its 2% target.
Bloomberg's Mike McKee. Treasury Secretary Scott Bessent says the Trump administration's agenda for trade agreements could be wrapped up by the beginning of September, telling Fox Business that the U.S. already has a deal in place with the U.K. and reached an accommodation with China. He did not specify which countries he does expect to have deals with. President Trump, though, says he will be immediately suspending trade talks with Canada over its plans to continue with its tax on technology firms. And there's your closing bell for this Friday on Wall Street, where the stock rally faded when President Trump posted on Truth Social that he's suspending those trade talks with Canada. We bring you the closing numbers each day here at Bloomberg. The S&P 500 ending the day 32 points higher, NASDAQ 105 points higher, and the Dow gaining 431 points. Remember, we had been expecting much bigger rally than that. Everything kind of slowed down after the president made his statement about suspending trade talks with Canada. Citigroup's Wealth Division CIO Katie Moore uncomfortable with the current stock market rally because of warning flags like declining earnings expectations and concentrated gains around a few companies. Moore is concerned that investors are shrugging off the impact of tariffs and are misguided in their enthusiasm for potential interest rate cuts, which would be a response to cooling overall activity. And despite those concerns, Moore remains confident in the sustainability of artificial intelligence and technology earnings and thinks U.S. large-cap companies are attractive investment options. Once again, the S&P 500, 32 points higher. NASDAQ ending the day 106 points higher. The Dow gained 432 points. The 10-year Treasury yield at 4.28% and the 2-year yield at 3.74%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is your Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome back, everybody. You are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stanovic, live in Southampton at the Uncharted Community Summit. You've heard a lot of our conversations. A lot of it has to do with the startup community, entrepreneurship. You know, that community gets a boost when the markets are doing good. And today was one of those days where markets did good, markets didn't do good.
And then they did well at the end.
Yeah,
it's kind of wild. Eric Weiner, keeping an eye on it all. He's senior editor for Equities Americas. He's back at the Bloomberg Interactive Brokers studio in New York. Eric, at one point today, we were set to have a record high close. Then a few hours later, there was some concern about the trade deal that the president walked away from with Canada, essentially ending negotiations over concerns over this digital tax. Stocks went down. And then at the end of the day, just now, yes, indeed, stocks higher by about half a percentage point on the S&P 500. What ended up happening at the end of the day where investors were willing to look past the news between the U.S. and Canada?
And he said that it would take 7 days for him to make a decision about what he was going to do. That really sort of gave people the idea that this will take more time, and that gives him more room to move. So I don't necessarily know. I mean, I'm not going to say that nobody believes him, but there's enough room for him to not do what he was saying he was going to do with Canada, and that also opens up, everything else with the trade deadlines and everything.
I should note we're out here in Southampton, and Carol, and one of the I got a ride here from the city.
Yeah.
The gentleman driving said he loves coming out here.
Yeah.
But he said, I don't understand why there's no signal out here, because you have so many people who are doing business and you still can't get these cell phone towers in these areas. And I just want to apologize to everyone. I was having some trouble getting the data because of the signal issues. The S&P 500 did close at the first record since February. All that to say, yes, we did get to a new record at the end of the day.
We did get to a new record. I mean, let's talk about the trade, though. What we're seeing, I heard Tom Keene earlier today, Eric, talk about the VIX below 20, yet we had a pretty volatile session. The trade that we're seeing, I also looked at the Mag 7 earlier when stocks were rallying, and they weren't moving up that much. So talk to us about the internals of the market and what we've seen, what the trade tells us about what's going on.
Well, there's a lot of room to move in the rest of the market beyond technology. And that was really what you saw today. If you look at what has really pushed this thing forward, it's been the big tech stocks. And that means that like the equal weights S&P 500, which doesn't take into account the size of the stocks, is significantly behind the S&P 500. So if you're playing catch up, there are a lot of areas to go, and particularly financials, where you have a really good setup for them. Like banks really should actually do well. So betting on them, buying into them, and if you don't believe that tariffs are about to take a bite out of everything, then it kind of makes sense. That said, there wasn't a ton of logic in today's trading with the up and down. It's just a lot of reflex, a lot of action, and it shows kind of how skittish things are. When you look at like something dropping so fast on Canada and then coming right back up, it's people trying to figure out what's going on. There's an excuse to sell. Let's sell into it. Let's buy back. And really, it's it's trading. It's momentum trading.
Eric, what is the catalyst that you're looking for on the equities team? Like, what's next on your radar? I'm thinking about the July 9th deadline for the tariff pause. I'm also thinking about JP Morgan earnings on July 15th. We have a Fed meeting at the end of July.
More in the moment.
Well, I don't know though. It's kind of a weird. It is kind of a weird moment because a lot of people are gone next week for the July 4th holiday.
You're not playing with me.
I'm not.
All right, go ahead.
But you know what I mean? It is kind of like next week is kind of quiet.
Yeah.
We do hear from the Fed chair in Portugal.
Okay.
He's going to be there along with other leaders of central banks. That sounds like a pretty cool place to go, by the way.
I'm not going to play with you.
What do you think, Eric? I mean, what's on what ahead of earnings and ahead of Powell? What is it?
Well, I kind of agree with Carol that you guys are out in the Hamptons and you should be going to Nick and Tony's after this. Yeah, there you go. And worrying more about that.
I have never loved you more, Eric, than this moment.
Live in the moment, Tim. But in all seriousness, what we're hearing is that they don't really buy that the 9th is going to be a finite date. So they're ready to trade through that. JP Morgan and the beginning of earnings season is a big deal. And the expectation is that banks will do well. The question is everything else. So it's really earnings season, and then the data drops because we're starting to see some of the inflation cycle through. We're starting to see some of the growth slowing down, and that's really where people will start getting nervous. If investors start seeing reasons to believe that there will be a pullback, and it'll be a fundamental pullback, that's when we could see a pretty big downdraft.
Yeah, I mean, once again, right? It's the news, it's the things that it's coming at investors, and we do see it's a very reactionary trade based on that, and that's what we see. Healthy trade, not healthy trade. I always like to ask volume. What did we see?
It was a healthy day. I mean, the volume was up. It really, and even during the period where things things dropped out and the bottom kind of fell out of the market, there wasn't this sense of panic. We weren't getting a lot of phone calls going, oh my God. It was really, it came down, and then as it started coming back, we were all saying to each other, they're not buying that in 7 days he's going to cut off Canada. And that's really it. Like if you have a president who speaks a lot, and he speaks extemporaneously and gets angry and reacts in the moment, and then will pull back, that's kind of the trade. That's kind of where Wall Street is.
All right, we're going to leave it there. Hey, listen, so glad we could check in with you, wrap up the week with you, Eric, on what was another fascinating trading day. That is, of course, our own Eric Weiner. He is Bloomberg News Senior Editor, Equities Americas, joining us back in our Bloomberg Interactive Brokers studio at Bloomberg headquarters in New York City.
I'm just pulling up where we did this week, Carol, because you reminded me. You were kind of a little surprised, 3.5%, 3.4% to the upside.
I had to double check it because I know we were having some connection, and I was like, is this the right trade?
That's right. That's pretty wild.
That's the backdrop for what's going on behind us. And of course, we are at Uncharted. It's Uncharted Community Summit. It is about a community of entrepreneurs and folks that, you know, kind of the ecosystem around them, whether it's those providing capital or support or advice. That's what it's all about. And the CEO of Uncharted and also co-founder of Top Shelf Ventures is back with us. He's Noah Friedman. I say back with us because I got an opportunity to talk to Noah this morning along with Michael Loeb. Good to have you here, Noah, again. And what was interesting is we talked to you before the event got started. It's been underway. You could hear, you know, the conversations, the activity, the energy. Tell us about some of what has been going up on stage and what you've been hearing from some of the folks here.
Wow, what's been going up on stage? Look, we've had some great panels that have ranged from the state of the political environment as it relates to the economy and how founders should be thinking about it, talking about how founders should be thinking about exiting their business. But I think the most important thing and the truth of what Uncharted is all about is what's happening right now, which is people just mingling and meeting each other. What we really care about here and what gets me excited as an entrepreneur is environments when I can kind of go up to anybody, shake their hand, say hello, and trust that they're going to be friendly, nice, and more important, someone who I can build with. So I like to think that's what's happening behind me, and I'll get the verdict from you guys and everyone else afterwards if we did our jobs.
What's being built right now in the startup ecosystem?
Look, everything with the word AI in it is getting a ton of attention. I think there's a lot of, we talked about this earlier, I think there's a lot of businesses that don't have the word AI in them that are still remarkable companies that are getting a shockingly low amount of attention. And so you have this barbell happening. I particularly am kind of on both sides of it, right? My fund invests in alcohol and consumer vice, which is, you know, there's some AI, but that's pretty antithetical. And on the other side, I'm personally investing and trying to start companies in the AI space as well. Most of the people here, I can guarantee you, if you ask them what's on your mind right now as a founder, AI is going to be obvious, and it's a natural thing to say. And I think that's top of mind for a lot of founders right now.
When everybody's saying that, I think this is something, did we talk about it with Michael, or I'm trying to think, we've had so many good conversations here. This idea that there's just so much coming at us with an AI connection that ultimately the dust is going to settle. There's going to be some really big winners and losers. How do you, as an investor who's also looking at these opportunities, or an entrepreneur trying to start something up, how do you figure out which way to go?
It's a great question. Look, I think that there's an unbelievable power law that's playing out here. I've said this a lot, and I'm going to continue to say it. I think that despite the fact that there is about to be so much money made in AI, an unbelievable tidal wave of innovation and opportunity, there's a lot of people who are going to get absolutely smoked, right? And the reason for that is that there's a lot of people who, out of necessity, based on funds that have raised money from LPs that are expecting them to deploy, are trying to rush into rounds for businesses with basically a deck and an idea at $50 million pre-money valuations, or sometimes even higher. Sometimes that will work, often it will not. And so I think that you have an interesting dynamic now where founders have a ton of power if they're willing to build an AI, and I think that that plays nicely to the founder. So as an investor, as an entrepreneur, I'm thinking about how I can create leverage out of myself, use AI tools to get more out of Noah, more out of a small team, and create unbelievable levels of efficiency. But I think, like entrepreneurship as a whole, AI really is going to expose people. It's a meritocracy. If you are good enough to figure out how to use AI, there's an unbelievable opportunity at hand right now.
There's been a lot of talk of AI today. I want to talk about booze.
Let's do it. I'm into it.
I'm curious about where you see opportunity right now, because we're seeing a real rise in non-alcoholic beers, non-alcoholic drinks. I mean, it's not weird to go and order a mocktail anymore. It used to be something that like kids did at bar and bat mitzvahs, but like that's actually happening in bars around New York City. What are the other vices and vice type categories that you're investing in? Because it seems like there's this really movement away from vice.
So I'll tell you right now, I have a potentially controversial opinion that the notion of betting against alcohol is a bad idea. I think alcohol for a long time has proven that it's remarkably resilient. This is not the first time, and it won't be the last time, that we hear headlines indicate that no one's drinking anymore. It is just not true. If you take the actual trajectory of alcohol consumption and sales over the last 50 years, it basically was a straight line north every single year, where the only thing we knew is that it was going to be higher next year than it was the previous year. In COVID, it spiked like crazy. Everybody started drinking like fish, and everything went to the moon. And so all the manufacturers made more, the distributors bought more, the retailers ordered more because consumers were buying more. And then lockdowns ended and people said, you know what, I should get healthy. I should try longevity. I should focus on saunas and optimizing my sleep. I think that's a moment in time. I believe in the longevity space, but we've had a slight dip in all-time high, which has created this compression in the market where it's creating all these headlines under the indication that people are not drinking more. It's really just a reset. And if you actually look at the sales in 2024 and 2025, they're higher than they were in 2019. So my personal hypothesis and we're investing accordingly, is that yes, non-alc is real, it's interesting, but booze is and will continue to be a deeply important part of the American and global psyche, economy, and so many other things. I also think at the same time, nicotine pouches, super, super interesting, huge opportunity there. We're investing. THC beverages, huge opportunity there. So look, consumers and humans at the most fundamental level put the markets aside. They need escapism, they need social connectivity, they need connection. And until there's other commercially reasonable and available things like alcohol and nicotine and THC that can solve for that, there's going to be a lot of money to be made in those spaces.
All right, but something like non-alcoholic beer, I mean, substantial growth. Some reports indicating a nearly 415% increase from 2018 to 2024 in retail sales. And mind you, it's coming from maybe a smaller bottom. But having said that, are you not playing in that space, the non-alcoholic space?
We haven't yet. I think if I had to guess in my funds, I think we'll make a couple bets in the space. I think it behaves distinctly differently than traditional alcohol and vice. I think there is a market for it. My personal bet is that we are probably near the top. I do think NA beer is going to continue to grow. I think NA beer is probably the best use case for it. I think NA cocktails are a little bit tougher. NA wine's a little bit tougher. I don't quite get it.
Well, the wine's not good. The beer's good. I like the cocktails.
A few wines.
On the nicotine pouches, you know, I've heard of some of the sort of direct-to-consumer startups like the Lucy's, for example.
We're investors.
Okay, you're investors in Lucy. How do you compete with Zyn, though? I mean, we're talking Philip Morris International. We're talking about a company that has like the in with all the retail partners.
Good point. Yeah, it's a great point. I love that you know this game. I'm impressed with that question. It's really good. Look, here's my.
I listen to a lot of podcasts.
Yeah. Here's my read on this.
But doesn't use it.
I don't. No, I've never tried.
We got to get you on, man. Look, here's my read on this.
I don't need it.
When you have a market like that that's going 30% CAGR every single year, we're talking about billions and billions of dollars. Yeah, Zyn is the 10,000-pound gorilla in the room. They have more money than they know what to do with. The reality is, and this goes into a fundamental thesis I have, consumers are inherently promiscuous. I think they're excited to try new things. When you have a market that is and is going to continue to be as big as nicotine pouches are, there just has to be room for more. And so my thesis in bed is that, yes, Philip Morris has crushed it. Unbelievable acquisition with Zyn, and they're doing a great job. By definition, all the other big tobacco players, and even I'm willing to bet that a lot of the booze companies as well, are going to say, you know what, this is a huge market that behaves similarly to alcohol in many ways. We need to play there. And so when you have businesses like Lucy, which as far as I can see is the largest independent that's not owned by a conglomerate, growing as quickly as they are, getting themselves into this.
I'm ready. Okay, we seem to have trouble with that connection.
What's the smart narrative around it right now?
Yeah, my opinion is that the smart narrative for THC, if you wanted to bet, is that you have to look at the hemp-derived THC beverage market. That is a very specific legislative opportunity that allows THC derived from hemp to be sold in beverage form. It's an explosive market that's growing like crazy. It behaves like alcohol in terms of how people consume it, but it makes you feel sort of more similar to weed.
Yeah.
Huge, huge opportunity in that space. So hemp THC, that's where I'd be betting.
All right, great stuff. Thank you so much.
Thank you for having me. It's always an honor.
A twofer. So good to have you here. Noah Friedman, CEO of Uncharted, co-founder of Top Shelf Ventures, as we said, along with Michael Loeb, the co-founders of Uncharted. So great to have you here. Thank you.
Just a reminder, we did see the S&P 500 close at a new record. It was the first record the S&P 500 hit going all the way back to February. So a little optimism in the trade, Carol.
All right. And we're obviously continuing to monitor news out of Washington, including some comments by President Trump. So, of course, we'll take you there or bring them to you as they are known. This is Bloomberg.
421 on Wall Street, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And we bring you the closing numbers each day here at Bloomberg. The S&P gained 25 points. That's a record high. NASDAQ gained 106 points, also a record high. The Dow gained 432 points, not a record. The 10-year Treasury yield at 4.27%, the 2-year yield at 3.74%. Tesla CEO Elon Musk said a Tesla Model Y SUV drove itself from the company's factory near Austin to a customer's home in the company's latest move to showcase its push into autonomous driving. In a post on X, Musk announced the company had made an autonomous delivery of a Tesla Model Y from factory to customer's home, noting the delivery was made across town and included highways. Republicans have reached a tentative deal to raise the limit on the state and local tax deduction to $40,000 a year for a 5-year period. That's according to a person familiar with the matter. It was not immediately clear whether enough of the so-called SALT Republicans in the House would accept the concession and drop their threats to block President Trump's massive tax and spending package. Now, the president says his July 4th goal to pass his tax bill is not necessarily an absolute deadline, and that has given Republican negotiators more breathing room. Trump does plan to stay in Washington over this weekend to exert more pressure on lawmakers to reach a deal on the bill, which remains divided over several thorny issues, including SALT. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Hey, thanks so much for that update, Amy. Do appreciate it. As you know from watching and listening to us regularly, there's been a big focus on public health. Kind of a renewed focus on public health, I'd say, thanks to what we're hearing from Washington when it comes to policy.
We're certainly having a lot more conversations about it, courtesy of the new Health and Human Services Secretary.
Well, so the latest is the overhauled U.S. panel that's reviewing vaccine data backed the use of only thimerosal-free flu shots for Americans. It takes aim at this little-used ingredient that's been falsely linked with autism despite decades of evidence showing that it is safe. The preservative has proved to prevent bacteria from contaminating doses of the vaccine, and it's never been found to be unsafe. It's got no link to the development of autism. That's according to an exhaustive study from the National Academies of Medicine.
All right, no doubt about it. This is on Jessica Kamada's radar. She's founder and managing partner at Swizzle Ventures. It's a new venture capital firm that's raised a fund to focus on what it says is women's health, caregiving, and financial health, assuming she's watching all of this and so much more. And she joins us here at Uncharted. Great to have you here. How are you?
Great. So happy to be here.
Tell us, though, we assumed you're watching this, but tell us some of the things that are top and, front and center for you when you think about investing.
Absolutely. So we're looking at really the course of a woman's lifetime and investing in companies that advance women's health and wealth through pivotal life stages. We see 3 sectors as really filling the gaps for women over those life stages. So healthcare, physical healthcare, caregiving responsibilities on the elder side, and early child care, and then financial health.
I want to say good, because especially when you get just down to medical health and healthcare, it's just so behind, even R&D, and it's just amazing. Even I don't want to do a blanket statement about professionals in the field, but I just hear over and over again women who go in and it's just things are ignored, said it's not anything, and things that turn out to be things. So how can you through VC, venture, and investing kind of change some of that?
Yeah, absolutely. I think it's a little known fact that we only have 34 years of women's health research. We were only included in clinical trials since 1993 when NIH mandated that. It's insane. So when we go into the doctor's office, it's actually just lack of education on MD's front. I mean, they only get 4 hours of menopause training in their entire, 8 years of training. So some of it is not actually their fault, but the research just has to catch up, and the education of the system has to catch up. So
that's just shocking to me.
Can I just ask you, is that research being hurt by what's been going on in the government and cuts?
We are very much looking at the cuts.
Yeah.
Because I think if they're, they did initially say that they were going to cut a longitudinal study that has been going on for 30 years. They reinstated that until at least January 2026. So we're now watching that. And if they cut it, then, we're going to lose 30 years of longitudinal data that we've been collecting over, with women over the course of their lifetime. So we are looking at that from a research perspective. But I think what's amazing and where tech comes into play is that these tech companies, especially with AI, are now creating their own data sets to help empower these researchers.
So how would it change your opportunities as a venture capitalist if those cuts were to happen? And if we do see a pullback in funding from Washington, we've already seen a pullback in funding, at least to universities, to research. We talked to a lot of venture capitalists in the biotech space about this. Does that make your job more difficult because there will be fewer founders out there chasing opportunities, or does it shut opportunities off for you?
I think one major concern in the research and biotech world, and also VCs, is just a brain drain. Like these, the tech companies are built on the research that has been created over the last 30 years or so. Now that we have AI, they can finally do something with that data, create personalized care plans, etc. But if the underlying data is not there and that doesn't progress, then it's a lot harder to build on top of it. And funding research is not really in the VC model. So we can only fund the companies that are built on top of that research. And we have to rely on federal funding, on other grants, on philanthropy to fund the actual research that's underlying. So my concern is that if we're funding companies that are going to be great 10 years from now, then what do I fund 10 years from now if that research doesn't continue at the clip it is today?
We're talking with Jessica Kamada, founder and managing partner at Swizzle Ventures. You initially said it's divided into kind of three buckets, right? You talked about healthcare, you talked about caregiving, you talked about financial health. Where are you finding the most kind of entrepreneurs doing things? Is it equal? Are there certain buckets that are, people that are starting different companies? What are you finding?
We've funded 20 portfolio companies in this current fund, and they're pretty split evenly among the three sectors. I would say that in the caregiving sector, we're finding the most opportunities in elder care right now, just because of the population progression.
It's a big play, I feel like, with everything.
It's a huge play. It's also something that is just undoubted. Like, it's a bipartisan issue. No one is gonna, argue that the population is not aging.
Right.
So it's something that everyone agrees on and knows that the healthcare system will be overwhelmed if we do not do something about it.
But that's very employee intensive. That's very human intensive. And there's been a lot of commentary about the immigrant labor that actually does a lot of the caregiving of elders in the United States and potentially how that will be affected. Can this be solved with technology? I mean, same with child, like with caregiving for children. Like, you need people to do that. How do you take a venture capitalist approach to this stuff?
Yeah, part of it is trying to fix the system and finding business models that are aligning all the incentives at play. Because a lot of it is just like incentives, right? And the issue with human caregivers is that it's a ruthless job. There's a lot of high turnover in it. For example, one company that's here, RubyWell, they enable family caregivers to get paid through Medicare benefits that already exist. So it's really about helping people navigate the system that's so tricky and gatekept to figure out. But those dollars are there. They just need help accessing them. And they work with the basically staffing agencies, the home health care agencies that do that work.
How easy is it for you to get capital and create funds? She laughs.
It was not as challenging as I had expected. However, this was the first environment that I have raised a fund in versus being in market in 2021 when I have heard that dollars were falling from the sky. So one of the things about my thesis is that it's very relatable. Every single human has struggled through a pivotal life stage, be it a man or a woman.
Right.
And I think that relatability has helped me for investors to understand what I'm trying to build.
But even women specifically, like, is there always it's a little trickier, right? When it's
a little trickier.
Women's issues, I feel like.
It's a little trickier until you dig in to explain the economic opportunity. I mean, investing in women's health is a $1 trillion market, $320 billion in the U.S. alone. So when you really uncover the numbers behind the opportunity, it's far larger than people expect, and that's typically what I lead with.
Yeah.
And from a wealth perspective, when we think about the great wealth transfer already in play. Yeah, go ahead.
Well, I don't mean to sound glib, but if you were to sort of look at the categories that might be the least challenging to disrupt through venture capital and through funding companies, it wouldn't be these categories. I mean, these are categories that are ripe with regulation.
Yes.
They're categories that aren't necessary. It's not like you're creating an app. You know,
sometimes you are
human capital intensive though. Like this is a really challenging space. I think am I wrong about that? Like I know
to us?
No, but
no, you're not.
But like all venture capital stuff. Thanks, Carol. But like all this is really tough stuff. But it's like you see the way money's flowing for like AI agents and like companies that are built on ChatGPT. That seems to be the path of least resistance right now.
So I was at a consumer AI summit yesterday, and a lot of the companies were creating connecting you to the right clothes and like things that are really fun. And there does need to be fun in consumer. AI does need to be fun to use, but it also needs to be helping like very foundational human things. And it can do that as well. Like sometimes I think in these categories, it doesn't actually need to be flashy. It just needs to solve a problem. Like, for instance, we have some companies that are not that high tech. It's, a maternal mental health company where they're just providing access to mental health professionals after you have a baby, which is a leading cause of maternal death. And it's like, it's not that hard of a concept, and it doesn't really require AI. It's just filling a need that didn't exist before. And there are so many more of those in women's health and these categories because they've been so overlooked and underinvested in. So yes, we have fancy AI companies like investment platforms directed at Gen Z, or like hormonal monitors that you can do at home. But some of them are not as high-tech, and they don't need to be.
What would surprise somebody about investing in this space? I know you talked about the economics, which I thought was really kind of telling some of the numbers, right? Because when people see, I'm sure, hear that, they're like, oh, I get it, right? This is a really untapped marketplace. Why aren't we doing more? But I'm just curious, as you've been like talking to entrepreneurs, thinking about, initiatives specifically that fall into, women's fields.
I think people are surprised at how much deal flow there actually is and how many people are building in these spaces because they're building for themselves. Typically, they're building because they see a need of their own in their own life that was unmet through one of these pivotal life stages.
Right.
And they don't see anyone else tackling it. And so they go for it themselves.
It's funny. That's what Bill Harris said formerly of PayPal. And he said his current investment firm, it was something he wanted, he needed, and that's what he created. Like, makes the most sense for entrepreneurs to be doing that. Come visit us in New York, back at home base. We're in New York, but home base. Jessica Kamada, she is founder and managing partner at Swizzle Ventures, joining us here at Uncharted. Thank you so much.
Thank you so much for having me.
Really appreciate it.
Well, let's go back to New York.
You weren't mansplaining.
Oh, thank you, Carol. Try never to. It's called Timsplaining, by the way. Not
it is Timsplaining.
Hey, some breaking news. A group of large U.S. banks comfortably cleared the Federal Reserve's annual stress test. It sets the stage for lenders to boost buybacks and dividends for shareholders. We got Catherine Doherty in the Bloomberg Interactive Brokers studio back in Manhattan. Kat, not a big surprise that the 22 large U.S. banks cleared this annual stress test?
No, not at all. I think the expectation, knowing that we're going into a lighter regulatory environment, is that this is game on for the banks. And all of the complaining that they've been doing about the capital that they've had to set aside because of these tests, well, this test, as we've seen just now, is coming out a little bit lighter. It might indicate all expectations are that as of next week, the banks will start to announce their dividends, and those are likely to be quite positive given that they passed these stress tests with flying colors, and again, that this test was not as stringent as it has been in the past. Lighter, they've brought down some of the ratios that the banks have previously had to meet. So because of that, they're able to put more capital to work, less capital that they have to set aside in the event of a recession or other times of stress.
I mean, listen, the Fed does this, right? They do this annually. We look for the headlines. This is a good thing. This came out of the great financial crisis. The Fed is, though, planning to make some changes to the stress test process. I just wonder, are things going to change? Or are they going to get a little bit more looser?
Yes, so we're expecting that this is including the average results over 2 years, delaying the effective date of the annual stress test. These are all requirements that are going to change and is expected to be announced and updated later this year. But we need more details before we can dig into just what that might look like.
So investors, should they expect buybacks? What should they expect?
Yes, in the past, even when this test, which the banks have typically passed every year, I think it would be a major surprise if they did not, because overall, throughout the year, this isn't a day in which they're going to get surprises. If there were any red flags or an expectation that a bank might miss this test, they're in conversation and they are constantly updating the Fed to make sure that there is not going to be any major surprises, because that's not just bad for the banks, it's bad for the market overall. So in previous years, even when the stress tests have been harder to pass and the ratios have been higher, they still have passed them. So I think that the expectation, again, going into this year was they would pass, and because they would comfortably pass this time, whereas in previous years there might have been a question mark. I think this year there really wasn't a question mark going into this. And so on the back of this, the banks will start to announce their dividends, and typically, I have never seen it when they have passed and not raised their dividends. So it kind of, one follows the other, but we will have to wait for the banks to make those announcements, and they do have a period where they have to wait until they update their investors about what they're going to do with their dividend payments.
And I know, Tim, you brought up the KBW Bank Index on the terminal. It was up a little bit.
That was the chart I was looking at ended at 4, so it was up a little bit today. Yeah. I'm trying to figure out where the banks are in the after hours.
JP Morgan is up about 0.4%, a little bit of a blip to the upside, and then kind of backed off. So
like Kat said, everybody expected this.
Yeah, I'm seeing some headlines
Kat
now.
Doherty, thank you
says
so much. Follows the big banks.
I was just about to say that the headlines right now are just showing Wells Fargo up about 1%, Bank of America barely up 1%. So I do think that this was an expectation that the market was factoring in, and we'll just have to wait until Monday and Tuesday of next week for the announcements from the banks about these dividend payments.
Exactly. Right. Off to another set of headlines next week. Kat Doherty, thank you so much. Follows the big banks.
Today, trying to copy Europe.
With an update. Hey there, Amy.
It's not going to work out well for Europe either, and it's not going to work out well for Canada. They were foolish to do it, and so I said we're going to stop all negotiations with Canada right now until they straighten out their act. Okay?
Is there anything Canada can do to change your mind about this situation?
Well, no, they put a tax on companies that were American companies that they shouldn't. A very severe tax, and. Yeah, I guess they could remove it. They will, but it doesn't matter to me. We have all the cards. You know, we do a lot of business with Canada, but relatively little. They do most of their businesses with us. And when you have that circumstance, you treat people better. They've had farmers that are getting like 300, 400, 200% in tariffs. Nobody's ever seen anything like it. We have cases, you don't read this and the people don't report, but they charge us 400% on some dairy products. 400%. Nobody writes that. It's not fair to our farmers, and we've got to protect our farmers.
Sir, you just,
Yeah, Brian, go ahead.
You mentioned how much of a rate cut we would do to the interest on the debt. Earlier today, Director Pulte was on CNBC talking about how he suggested Powell should resign. Any comments on whether or not Powell should step down? I know you've been...
Well, I don't have a comment. I'd love him to resign if he wanted to. He's done a lousy job. Look, if you were there, you'd say, well, you know, the United States is doing well. They have no inflation. And if they do get inflation in a year or two, we'll start raising the rates. We'll get rid of the inflation, you know, and do other things. Biden had the worst inflation in the history of our country. 19%, but I think it was much higher than that. Frankly, they say 19%. I think it's a lot higher than that. And we have almost no inflation now. We've done a great job in a short period of time. Energy prices are way down. Gasoline now is down to close to $2 in a lot of places. A couple of places I see it even broke. It's like $1.98 a gallon. We've done a great job on inflation and honestly, pretty much everything else. I think it's very sad the way people act. You know, you have a guy in there that with the stroke of a pen could lower interest rates and save us hundreds of billions of dollars a year. But he's a stupid person. You know, it's very interesting. I'm not sure if he doesn't understand it, because you should be able to understand it. It's sort of 101 economics, but I'm not sure of that. But think of it, with the stroke of a pen, he talks about costs. We can save $600 billion, maybe even, these are nice numbers for you, right? $900 billion, $950 billion by lowering interest rates. And it's really just more of a paper movement. It's not like you're not cutting anything, you're not cutting jobs, it's just interest rates. And we're number 40 or 44, number 45. Some places that you wouldn't believe that, you know, I don't want to be disparaging, but they pay a lower interest rate than the United States of America. And without us, everything blows up. You know, we sort of control the world in that sense. But we have a guy that's just a stubborn mule and a stupid person that is making a big mistake. He's making a mistake, and it lasts for years, because when you do the debt, now I've instructed my people not to do any debt beyond 9 months or so. Get this guy out, and whoever is in there will lower rates. If I think somebody's going to keep the rates where they are or whatever, I'm not going to put them in. I'm going to put somebody that wants to cut rates. There are a lot of them out there. And I said this morning, a lot of the business shows today were saying, you know, Trump is right. He should be cutting rates. Think of it. We have a great country. We're making a lot of money. We're taking in billions of dollars in tariffs. We have $15 trillion of money that wants to be invested here, which is a record. In 2 months, it breaks any record that we've ever had for a whole year, and not even close. 15 trillion, and it's going to be much higher than that. That's after essentially 2 months, because, you know, we've been doing it for about 2 months, 2.5 months. $15 trillion breaks every record in the book. There's never been anything like this. We have factories moving in, we have car plants moving in, we have everyone wants to be part of the United States. And as I told you, and I say it to everybody, when I was in the Middle East, the King of Saudi Arabia and Qatar, and UAE, all great leaders, they have all great leaders. All three of them said, you got the hottest country in the world, and you did it at that time I was there for 4 months, because we got back a little while ago. But everybody says it, not only them. We have the hottest country in the world right now. The only thing is we have a Fed chairman that is, he doesn't get it. And you could have substantially lower. Like if we cut him 2 points, would save more than 600, think of it, more than $600 billion just because you cut. But you can't go out to the market and say, well, we have a guy that's got us at 4% or 4.5%, and we want to pay 2% or 1%. I think we should be paying 1% right now. And we're paying more because we have a guy who's, you know, suffers from, I think, Trump derangement syndrome, if you want to know the truth. But he's not good for our country.
The president of you.
No, not you.
A related question on banking. There have been reports, Mr. President, that your administration is considering issuing an executive order about debanking, which is the practice of banks denying services based on people's political beliefs or industries such as crypto, people involved in that. would you be open or interested to sign such an executive order targeting debanking, and what might?
Well, I think the debankers, I think that banks, I can tell you because I've been a victim myself, because of my politics, that big banks were very nasty to us. And I actually think it was Biden's people that told them to be, because the one group of people that banks are afraid of are the regulators. They are petrified of the regulators. And I've seen the biggest banker. I can tell you, you see him on television all the time. If a regulator walked into the room, he gets all nervous and crazy. They're afraid of the regulators. And if the Biden people order the banks to be virtually closed, they can do anything they want. The regulators control the banks. It's not the president of the bank. The president of the bank is far less important to a bank than a regulator. And a regulator can put that bank out of business, just like bad prosecutors are very dangerous. You know, we had a couple. I had deranged Jack Smith and some others. And we kicked their ass. But it was, you know, it's a tough kind of a situation. Prosecutors are very dangerous. A great prosecutor is an amazing asset for a country. But a corrupt prosecutor, a bad prosecutor is very bad. Well, the regulators are the same thing. And when they tell the regulator to go and make life impossible for big banks or little banks, they really control it. So there is a lot of debanking, and there's call it debanking, call it a lot of different names. Essentially, they make it impossible to do business. And those people are very bad and very dangerous, and they shouldn't be doing it.
Sir, you told us that on taxes, Mr. President, could you please explain how taxes would go up by 68% if the bill isn't passed? Where does that number come from?
Well, it comes from the fact that you have automatically the Trump cuts, which were the biggest cuts that we've ever had. Now, these cuts are even bigger, but from the last administration, we had the Trump cuts. It was a 5-year deal, and it comes due. When you add that to the cuts that you already have and other things, it amounts, according to what they tell me, about 68%. That would mean you'd have a tax, so that you know that the tax cuts that they got, the biggest tax cuts in our history, would immediately go up to that level. And that alone is a big chunk of the 68%. And then you have the other taxes that would accumulate. And they say that you'd have about a 68% tax increase.
Sir, you said a moment ago that it won't work out very well for Europe on trade. Does that mean you want to cut off those negotiations as well and just tell them what?
No, well, they've been very tough. The European Union was formed in order to take advantage of the United States on trade. That was why they were formed. And they're nasty. They're very nasty. We have a good relationship. I'm dealing with Ursula right now and the group. But it's a very tough situation. They have been unbelievably bad to us. If you look at past precedents, they've treated them very badly. They're being very nice to me because I get it. I know the system, and we have the cards. We have the cards far more than they do. And they have not treated us well, and they're coming to us right now. You know, I said I was going to put on a 50% tariff. As soon as I said that, I put it out on Truth. As soon as I said that, they came to the table. They didn't want to come to the table. My people were telling me, Scott was telling me, and the whole group was telling me that not a good situation. They want to tap it down the line. They don't want to really deal. So I said, we're going to put a 50% tariff on you. And Howard, as you know, was very much involved, Lutnick, Commerce, and he said they don't want to talk. As soon as I put that on, I was getting calls from them like, can we meet tomorrow? And the problem is they have a lot of very unfair taxes. They have a lot of taxes that you wouldn't put on, and they sue all our companies. They're constantly suing Apple and Google and all of these companies, and they're getting, you know, in front of judges that essentially almost work for them. I guess they do work for them. They're European Union judges, and they're getting these crazy rewards. Apple was fined $17 billion, and others are being fined tremendous numbers of dollars. They're nasty people, and I don't want them affecting U.S. companies. I don't want that. If anybody's going to affect a U.S. company, I want it to be us. And if they're going to have to pay a penalty or a fine, let it be to us. So they've done this for a long time, for years, but they're very nasty. The European Union is very nasty. There's no question, but they'll learn not to be so nasty very soon. They know that. They know it's coming.
President told us that Vladimir Putin reached out to you to help you with the Iran crisis.
We made some nice statements today. Did you see the statements? Very nice. Vladimir Putin made some very nice statements today. Look, he respects our country again. He didn't respect it a year ago, I can tell you right now. But Putin respects our country, and President Xi of China respects our country, and Kim Jong-un they respect our country again. We were not a country that was respected just a year ago. We had a president that was incompetent. We had bad people circulating around this desk, this beautiful, resolute desk. They had, I guess, evil intentions. You couldn't be that stupid. I mean, they had evil intentions. But the world respects our country again. Thank you very much, everybody.
Thank you, President.
Congratulations.
All right, well, there's President Trump wrapping up comments at the White House. The president, ostensibly, that was to speak about a peace deal reached between the Democratic Republic of the Congo and Rwanda, conflict that has really been happening over the last several decades. But the president answered a range of questions there from reporters about foreign policy, about economics here in the Fed chair, about so-called debanking and more.
Yeah, exactly. He did say on China specifically that President Xi of China respects us. He said President Putin made some nice statements today. He said Europe constantly suing our companies like Apple, tough situation with the EU dealing with the officials over there. He also said Europe has unfair taxes on the U.S. He also did talk, as Tim mentioned, about Fed Chair Jay Powell. He said that I'm going to be putting, let me just, forgive me, got a lot of things going on here. I'm going to put somebody as Fed Chair that wants to cut rates, we can presume. Forgive me, these headlines are just coming in pieces. I'd love Fed Chair Jay Powell to resign. So amping up, if you will, his pressure on the Fed Chair. We talked to our Mike McKee earlier in the week about this, that's probably not something that Jay Powell's going to do, even if the president starts to talk about who might be his successor.
We should also remind people that it's not the Fed chair who unilaterally makes decisions about the path of interest rates. It's a board.
It's the FOMC.
If you do get one, and also the Fed chair has to be confirmed by Congress. So, and the markets have something to say about who gets picked as the Fed chair. The bond market would certainly act up if it thought that the person who the president would potentially appoint to that position wouldn't necessarily be somebody who would follow the traditional path of lowering and raising rates when deemed necessary given the Fed's dual mandate.
Most people will tell you an independent Fed, an independent central bank is crucial for a successful monetary system. So having said that, we know global investors look at what's going on in terms of the central bank and monetary policy. So this is a big thing. The president did make some comments too on Canada, saying it's a difficult country to deal with. That's his view. He said that we, meaning the United States, have all the cards. He says Canada will remove the digital services tax. So that is the thing that has made him, it seems to be cut off negotiations with Canada specifically. So we'll have to see where that goes going forward. He covered really a lot of ground: geopolitics, trade, tariffs. He also talked about North Korea. We'll get the conflict solved with North Korea. It was a lot.
Atypical for the president to make comments at this time on a Friday. Typically, he's traveling.
Yeah.
To either Bedminster or to Mar-a-Lago in Florida. So we don't usually hear from the president at a press conference this late on a Friday.
I think this is interesting, too, talking about he says, I may send Patriot missiles to Ukraine, right? That has been a bit of a battle, too. We know he, I believe, saw President Zelensky at the NATO summit, in the NATO meeting. And so, again, the, support of the United States for Ukraine specifically, that is certainly something that we all keep a watch on. But that's a lot.
It's a lot. It's a lot. I'm Tim Stadovec along with Carol Massar.
Oh, are we done?
No,
No.
We're not done. I'm Tim Stadovec along with Carol Massar. Let's take a look at some stocks on the move this week. We're joined by Bloomberg News.
Oh, we're having some technical difficulties with Carol and Tim. We'll get back to them as soon as we get that straightened out. It is 4:56 on Wall Street. I'm Amy Morris. Let's bring you a Bloomberg Business Flash. The Fed says all 22 banks have passed the annual stress test, indicating they can withstand a severe recession and setting the stage for increased buybacks and dividends for shareholders. Now, the Fed is planning to make some changes to the stress test process, including averaging results over 2 years and delaying the effective date of the annual stress capital buffer requirement, and is expected to announce additional updates later this year. President Trump says he immediately will be suspending trade talks with Canada over its plans to continue with its tax on technology firms. He called it a direct and blatant attack on our country. Trump posted on Truth Social and just spoke in the White House about this, saying that Canada told the U.S. it is sticking to its plan to impose the tax that is set to take effect on Monday. Now, U.S. stocks rose to an all-time high just months after plunging on worries about tariffs, and we bring you the closing numbers each day here at Bloomberg. The S&P gained 32 points, squeaking out a record high. NASDAQ gained 106 points, also a record high. The Dow did not break any records today, but it did gain 432 points. The 10-year Treasury yield at 4.27%, and the 2-year yield at 3.74%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy Morris, thank you so much.
For
Carol
the
Masser, Tim
save.
Stenovec.
Amy for the save. A big thank you to Amy and a thank you to everybody in New York who has just kept this going, and also the crew here on set.
If we could swing the cameras around.
Can we? I don't know. I mean, there's like more than half a dozen people here
These guys have been doing an amazing job in keeping us together in what has been a really, really busy day. The news flow has been rather dramatic, and the market has reacted to it. We've had some great guests here who are all about entrepreneurs and startups and smaller companies that maybe become bigger companies. We talk about small companies, the backbone of the U.S. economy. It was great to kind of check in on this sector of our world.
This is a conference, but it's kind of like a party. Truly feels like a party. And it's actually just getting started.
Tim keeps saying, I'll give you $100 if you jump in the pool. I'll give you $1,000 if you jump in the pool. I'm not jumping in the pool.
I just thought that would be like extremely disruptive and hilarious. There's a pool here. It's like at any of these events. There's always a great pool. There's always a hot tub. Nobody's ever in them.
Is it because I know.
Nobody's ever in them. It's like you go to Milken, and that's the same thing.